All right. So I'm a 23-year-old real estate developer, and arriving to where I am right now followed a completely logical path. And what I'm going to try to do in 10 minutes right now is show you how I arrived to this spot by following exactly the steps that I took. And so first thing is learning about the most accessible way to get into real estate development, which is building purpose-built vacation rentals. And I was an obsessed person about real estate development years ago. And so immediately the question became, all right, how can I get into real estate development as soon as possible? Because I was working at a 4-person shop in Austin, Texas. We were moving $900 million across all of our deals, which was really just like 5 towers or like garden style apartments. And my boss was making $20 million fees on the projects that we were doing, and I was getting paid $20 an hour. My boss was getting paid maybe like $130,000 a year, but not incredible when you compare to how much Tyler was making, which is $20 million per deal. And so, all right, I know now that I need to become an owner. I need to become Tyler. I can't become the director of development and employee. I have to be an owner. And so how can I do that as fast as possible? And I quickly learned about purpose-built vacation rentals through the success of other people. A great example is Isaac French. He built a property for $2.1 million using $20,000 down and sold it for $7 million. Incredible returns. Next thing, there's a company called Stay Onera out of Fredericksburg, Texas. They built unique purpose-built vacation rentals. Multiple properties were on one piece of land, and they sold it to private equity for record-breaking numbers. Another example of purpose-built vacation rentals doing crazy numbers. The third example is Finger Lakes Treehouse. Daryl Maxim out of New York. That property is listed for $15 million. It's a 40-acre property, but they built 5 units and then a couple of smaller units, like very little capital expenditures to build the property, and they sell it for $15 million. Or it's listed right now for $15 million. You can go check it out. Other example, Ava Shenandoah out of the Shenandoah Valley. It was built for $660,000 and sold for $2.1 million 2 years later. You're not getting that kind of return doing the burst strategy. You're not getting that kind of return doing wholesaling. I mean, wholesaling, it's a completely different business model. But as far as like putting money into real estate deals, nothing else is doing numbers quite like that. And it's because they have the highest yield on cost. So per dollar spent into the deal annually from the cash flow, revenue minus expenses before debt, these properties are earning more than any other asset type available. So some examples, Isaac French property out of Waco, Texas was a 21% yield on cost. The deals that I was doing in Austin, Texas were 6% yield, maybe 7% yield. An 8% yield is insane, which makes 21% yield on cost crazier. And if you go smaller, if you just build one property, like an Ava Shenandoah, it was a 41% yield on cost, which means it's essentially like if you were to have bought the whole thing using cash, it's like buying a bond that spits off 41% of its value every single year. But the even better part is that you're not buying it with cash. You're using a bank loan that finances most of it, and so it increases your returns even more. And because of the recent law change, you can depreciate 30% up to 35% of the property's value in the first year if you are under the IRS like a qualified something or other. But essentially that also inflates the exit price. So instead of it just being a home that sells, because it's a short-term rental, the purchaser gets to depreciate 35% of the value, which inflates the sales price more than it probably should, because the people buying these assets no longer see it as just like a cash flow play. They see it as a tax play. And now, as to why I was able to get into it. So it's a very low barrier to entry. A lot of these real estate developments require changes of zoning or unique amendment changes or some variances. This purpose-built vacation rental thing requires none of that. You can buy right, build homes on residential lots. And so I don't have to get approval to build, for example, in Austin, Texas, those $300 million towers we were spending on attorney fees $500,000 just for the government. So we were paying $500,000 to an attorney to petition to the government to have the government approve our project. And I just recently met with a real estate attorney on Friday, and I asked him hey, is that amount of budget crazy? I didn't think it was, but I just wanted to confirm to see how different markets were. And he was like, yeah, $500,000 sounds about right for that kind of project. So in this type of game, purpose-built vacation rentals, if you're just building one home on one lot, you don't have to mess with any of that entitlement stuff, which is really complicated and introduces a lot of risk. The next thing is you only have to put 10% down. So if it's an investment loan, you typically have to put 20% down, but because it's a residential and it's likely going to be your first build like it was for mine, you only have to put down 10%, and that's on a construction loan. And so you can build, you just have to get the construction financing, which is available. And the next thing is that you don't have to swing a hammer. Because these properties make so much, you can justify paying a general contractor to manage the whole process. So all you are left to do is do the financial modeling and the market analysis to determine whether an investment in this area is going to reap the reward that justifies the risk, whether the lemon is worth a squeeze or something like that. The next thing is, because the amount of capital that you're investing into these deals is so small relatively, it scares away, or wealthier people aren't investing time into this area. What wealthy people wanting to invest in real estate are looking to buy 20 unit apartments, 30 unit apartments, 100 unit apartments. They're not looking to just build one unit. So it opens up a lot of opportunity for people who believe that $100,000 in revenue is a lot of money, because it is. But for the people that are very familiar with playing this game of real estate, it's just not enough for them. But for us, one property was enough for me to not take a job. The cash flow from one property was enough for me to not take a job working full-time real estate development for somebody else. So I think I explained that. So because $100,000 is a lot, but it's not a lot to the people that really play the real estate game, it scares away the people playing in this field of purpose-built vacation rentals. And so it rewards people that value $100,000 in revenue. Now, the properties in my market like that, they're doing much more than $100,000 in revenue. There's definitely ones in your market that are doing it too. The next reason why I got into this space is because development follows the same process regardless of whether it's a $300 million tower or a $300,000 cabin. You're still dealing with one architect or designer. You're still dealing with one contractor, one lender, one land seller, and typically one investor or a pool of investors. And so me, being completely new to this game, I get to play this game of real estate development. I can be a real estate developer, still managing the same 5 stakeholders, building that muscle, gaining that experience in essentially a sandbox. Because these deals have so much upside, I can mess up in a really big way and still make a lot of money. That's exactly how I see it. It's a sandbox. I get to practice how I interact with my contractor. I get to practice with how I interact with my lender, my land seller, my investors, all in a space where it's really hard to lose. A lot of upside, which means I have to really mess up to get myself in a bad position. And yeah, the short entitlement period, because it's residential. You buy a residential lot, you build a residential house, you just make it a short-term rental. You don't have to go through those long entitlement processes. So for those big projects that I was doing, we would put the land under contract, and it would be 2 years from the point that we maybe got the right to put a shovel in the dirt and start going vertical on it. 2 years of entitlement, getting permission from the government to build, getting the designs ready, getting the financing lined up, the investors. You don't have to wait 2 years to do this. In most counties, you can get building permits within 2 weeks for doing ground up development. Next thing is, why is this a good thing to get into right now? And the most important one is a story that I'm going to share about my brother Jason. So he recently retired, but at the end of his career, which was just a couple weeks ago, he was making $600,000 in corporate. He's retired now, very young, but he's completely retired. And he said, Renzo, think about this. If they were able to pay me $600,000, how much do you think I was making them? He was managing a marketing budget of $100 million for a tech company. He essentially said, if these companies are able to pay you this, the amount of value that you're offering them is so much more. And so why don't you just start with doing that for yourself? Yes, it's going to be hard in the beginning. It definitely wasn't easy. If I have to convince you to do entrepreneurship is definitely not for you. But I'm just saying and sharing the thought process that led me down entrepreneurship. And it was exactly that. I was fine with earning a little bit less in the beginning, knowing that the payoff is far greater further down the line. So a little bit of a long-term thinking. Another thing, like School of Hard Knocks. I love James. He's so good at doing those interviews. But he said the wealthiest people don't play 1-year games. They play 10-year games. I see this being a 10-year game, even though I'm winning just 2 years after starting. The next thing is there's never a better time to be entrepreneurial than right out of college, because you don't have golden handcuffs. Each day that goes on being in corporate, it becomes harder to leave because your body, your mind, your whole lifestyle becomes happy with the comfort that a steady paycheck offers you. It becomes harder to leave certainty the longer you go with it. Your mind just becomes conditioned to the comfort of it. So why not just never enter that comfort ever? The scariest part to me about a full-time job was the comfort and the security that it would offer me, because I knew that once I had that taste, it would be harder to leave that. I mean, I could just see that with people that are in corporate right now. They wanted to do entrepreneurship. They want to do entrepreneurship, but just leaving that steady paycheck, going back to an uncertain period, becomes harder. The next thing is that when you're just starting your life, you don't have a lifestyle. You don't have vacation time. You don't have the nice cars that all these people are getting. You don't have anything. You don't have a nice house. And so if I were to have worked a job for 2 years, my lifestyle would have gotten better. I would have gotten a nicer car probably. I would have gotten all these things. And leaving that to have to lower my lifestyle becomes a lot harder. Versus if you never had that lifestyle, you could just start at rock bottom and build from there. And the next thing, and the last thing that I'll discuss, is short-term rentals compared to any other investment strategy. So if you want to buy a long-term rental and earn maybe $100 a month per property and count on you paying off the property for 30 years, I just mentioned playing long-term game was part of my thought process, but I am not down to wait 30 years to pay off the mortgage to finally earn some cash flow. I want to get cash flow today, which is why when I modeled the short-term rental process for my build, which I teach other people how to do this, there was enough cash flow for me to live off of just one property. That amount of cash flow is not something you get in a long-term rental. And I could have allocated all those dollars to buy a long-term rental and maybe gotten $100 of cash flow, but why not do that and get $3,000 or $4,000 of cash flow? That's revenue minus expenses minus debt that ends up in your pocket from one investment. Yes, it takes some time to do the construction, but I mean, do I really have to? I personally think if anybody challenges me about why purpose-built short-term rentals is not the best strategy, if you have a 12-month time horizon, yes, it does take time for something to get built, but also you get to create something that didn't exist before. And you get to develop all these skills that are required to do bigger deals in a sandbox, essentially. You can mess up in big ways and still be okay. Man, that got me worked up. I love short-term rentals. I love building them, and I love helping other people enter the game because real estate development is the coolest occupation, and I want to see more people succeed in it. So good luck on your journey. Hope this helped you, and let's build.